All right. So before joining UPGA, Mark Klompien served for 4.5 years as the president of the Idaho Growers Shippers Association. Prior to his time with the IGA, he was the vice president of supply chain management at Idahoan Foods and also spent 18 years at Basic American Foods and 6 years at Lamb Weston. During his tenure with BAF, Mark held a number of positions in engineering, operations, raw materials, supply chain procurement, and government relations. Mark spent virtually his entire life in potatoes, from growing up and working on his father's seed potato farm in Montana to his lengthy career in the potato processing industry. He has worked firsthand with all of the grower shippers in Idaho, as well as most other potato producing states, and has built positive and trusting relationships along the way. Mark has served as the chairman of the Potato Executive Committee for the Idaho Association of Commerce and Industry, and also served as a board member and executive committee vice chair of IACI. He served on the College of Agriculture Advisory Board for the University of Idaho and on the board of the United Fresh Fruit and Vegetable Association. Mark holds a Bachelor of Science degree in Agricultural Engineering from Montana State University and completed the Stanford Graduate School of Business Executive Program. He obtained his professional engineering license in 1995. He and his wife Valerie make their home in Idaho Falls, Idaho. Mark?
Thank you, Dale. Dale, thank you very much for that. And yes, I'm happy to say that was one thing we accomplished this year is we got my picture updated from the yearbook photo that we had for those of you that attended last year's conference, my high school yearbook photo. So Dale is an incredibly efficient taskmaster, so we are in great shape on time, and I'm happy to report we'll be done in plenty of time and be able to give you a little break even between our luncheon coming up. So what I want to do this morning is in a couple parts. I'm first going to spend some time talking about a little bit of a 10-year history in all the sectors, the varietal sectors of the fresh potato world, and really talk about that supply-price relationship history for all those segments. The first one I want to talk about, this is becoming a much more significant component of the fresh marketplace in the United States. And that's yellow potatoes. That's something, as we look through these, you're really going to see just a really incredible growth in that segment, which is pretty amazing, actually. And so yellow potatoes are becoming more and more important to the fresh marketplace here in the U.S. So to start with, this shows that what I talked about, a 10-year supply history of yellow potatoes. This is in 1,000 hundredweights, so starting back in the 2008 crop, you see almost 4.5 million hundredweight of yellow potatoes were produced. And with only one small exception there in the 2015 crop year, there has been growth in this yellow category every single year with that one exception. And to point out, that's even accelerated somewhat just in the last couple of years from in the 2015 crop to the 2016 crop. That change there, that's about, I think it's 13 or 14% increase in that year over year. Just this past year from the 2016 crop to the 2017 crop, that increase is just a shade under 10%. Again, it just really points out that growth rate that we're experiencing in the yellow potato segment and the importance of that to the fresh market. The total fresh market that United is projecting for the 2017 crop year, the shipping year that we're in now, is right below 93 million hundredweight. 92.8 million, I think, to be exact. So that 9.2 million that you see there, this will be the first time in history that the yellow potato category is right at double digits as a component of the overall fresh market, right at almost 10%. So to look at in a little different perspective, to kind of put some meat on that bone, so to speak, in the growth in yellow potatoes. Those of you that watch our weekly podcast will be used to seeing these kind of charts. This is a 7-week, the most recent 7-week shipping pattern window for yellow potatoes. Again, the top red line is the actual shipments for those specific weeks, the last 7 weeks. The background color there is the 3-year average for yellow shipments over that time period, and the dotted red line across the top is last year. So again, it just really points out the incredible growth that we're experiencing in the yellow shipment patterns and how that's affecting the market here. You can see how the trend looks, and probably will continue to look for this year as well for the next 6 or 7 weeks. But that line again will be well above the previous year's shipments. So just to kind of sum up a little bit about the yellow market, that first slide I showed with the 10-year step ladder that you saw there, the average growth rate over the course of that 10-year window is over 10%, 10.5%. And again, when you're talking about the fresh potato world and the environment that we're in, that's just a really kind of amazing factor to see that 10% or 10.5% annual growth rate over the last 10 years. To talk about more recent developments, the last 5-month period, the last half or almost half of 2017, from August through December, the shipment growth rate was even higher than that. Like I said, the growth for last year to this year's crop is about 10%, but the growth rate for that 5-month period, you can see, is over 21%. And that tells you that not only is those shipments going up, but we're pacing faster than even the supplies that we have in the current market, suggesting that demand is significant out there. So what does that mean for price? We always talk a lot about, in fact, that's a lot of our goal at United. We talk about that price and supply relationship. What does that mean for price? The average 5-pound bale price for that same time period, that same 5-month window from August through December of 2017, went from $13.93 a bale a year ago to $12.62. So you say, okay, yeah, it declined a little bit. You might expect that with the significant increase in supply we had. However, that's only, that's certainly less than 10%, and that's in the potato world, that kind of a drop with that kind of a volume increase, you don't really see that. And 1262, I'll tell you, even though lower, it's still a very profitable level and still something that the growers are seeing a very fair return for that yellow potato segment. What's causing it? What's driving this? Well, I'll suggest some postulations to you about this and what's going on here. So first of all, no single region really dominates in the yellow fresh potato market like it does, say, in the red market or in the russet market. In the red market, certainly you have, and I'll talk more about this later as well when we get into reds, but in the red market you have the Red River Valley, North Dakota, Minnesota area, of course, and in the russet market, you have Idaho. If you're in the red growing business, you're linked with the Red River Valley. If you're in the russet growing business, you're linked with Idaho. In the yellow market, there is no single dominant player out there. Yesterday in one of our meetings, we looked at the shipping patterns by quarter and what each region contributes to that yellow market. And there's almost, I think, 25 or 26 specific geographic shipping regions in yellows, and none of them usually exceed in any given quarter 15 or 20% of the total market. The other thing about yellows, I think you heard me mention this last year, because when we put up those slides showing the weekly shipments, we oftentimes overlay that with what we call a balanced demand curve. And that balanced demand curve is where you say, if you're above or below that, what your price expectations can be given that supply situation. In the yellow market, because of what's happening, what I've just described, we really don't have that determined. Like I said, the 10-year growth rate continues to expand, and it continues to give growers positive returns. So we haven't really determined that yellow supply price positive volume line. So yellow prices, just like I showed on that last part of the pricing chart, have dipped slightly, although albeit still very favorable, very fair, and positive pricing. They have dipped slightly. So it does ask the question, and this is a question in the yellow market we need to consider and think about: is what is that point of achieving that balanced demand curve? How many yellow potatoes will the market accept and still give positive returns? You remember that first slide I showed, the step function and the year-over-year growth. Looks kind of like a step ladder. You all have probably a step ladder in your garage. You've probably all been changing a light bulb and gotten too high on it. On the top step of that ladder, it says, "Caution, danger, do not step." Everybody always steps on there anyway. So consider that in the yellow market. At some point in time, you're going to get a danger sign, a warning sign of do not step, right? So I'll submit, as in this growth rate, think about the strategy, the marketplace, understand that, get the information that you can, participate in gathering that knowledge and information in the yellow market. So because eventually we do have to come to grips with where that supply line is, where that balanced supply line is. All right, I'm going to shift to the red potato category for a few minutes here. And in the red potato 10-year supply average, you can see here, also showing from the 2008 crop that had a pretty significantly big crop. It's the one little bit of anomaly before this trend line started here for the next 6 or 7 years. But from that point, you can see that it's a nice, if you put a trend line on that during that period, you'd have a nice upward trend line in the red potato market. Some suggest that maybe akin to what the yellow market is experiencing, and where we've now, over the last 3 or 4 years, plateaued and even slightly down, but it's been somewhat stable over that course of the last 4 or 5 years. The one anomaly to that, I'll tell you, and most of you know this, but that decrease that you see there in the 2016 crop, below that 15 million level in the red market, was driven almost solely, entirely by a significant challenge in weather in the Red River Valley that year. They had a crop, I don't know if I call it a disaster, but it was certainly took a huge chunk out of what the Red River Valley produced. And so that's that one little bit of an anomaly that you see from this flattening curve. This year we're back above 15 million. The Red River Valley has a very, very nice crop up there. 15.1 million is the projection for this current crop year. Again, going back to the 92.8 million of total fresh projection for shipments this year, that 15.1 million represents a little over 16%, I believe it is, of that component of the fresh market. So between reds and yellows, it's a significant chunk. It's not quite 30%, but between 25 and 30% now of the fresh market in those categories. Let's talk a little bit about summarizing that red potato supply data. The average 10-year annual growth rate in red potato supplies, unlike in yellows where you saw the 10.5% increase in the yellow world, it actually is an increase. It's 1.5% over that 10-year period. Obviously much less, but you kind of saw where those trend lines fell in, and then the flattening over the last 3 or 4 years, but that average rate over that 10-year period is 1.5%. What's been happening in pricing? The average sac A price, to use as a proxy, if you will, for the red potato market from 2016 to 2017, you can see there from 10.56 down to 10.36, very small, minimal drop. It's roughly the same price. And bear in mind, again, like I said, with what happened in the Red River Valley in the 2016 crop, there's almost a 48%, almost 50% increase in volume projected from the Red River Valley production, just over 2.4 million, up to our projection for this year of reds from the valley there at just under 3.6 million. So it's a significant increase in volume, obviously coming from the red market. However, the pricing was able to be stabilized and maintained, which again is pretty incredible, and I'll talk a little bit about that and what we think happened, how we try to facilitate that kind of thing happening. And just as you see here, red price is more stable today, certainly in the recent history, and less affected, obviously, by those supply shifts than ever before. And so that does ask the question, certainly, is why is that? Again, I'll proffer some thoughts about that and give them to you for your consideration. Every year in June, usually the latter half of June, we hold what we call a crop transition conference. We do that in Minneapolis. It's pretty focused on the red sector, although we do spend a fair amount of time also on yellow potatoes and on russet potatoes. But it's really that time of year where we're going to start to get into the crop transition and really how that's going to play out. A chance to bring everybody that has a vested interest in those areas together to collaborate and discuss what's going to happen and how we can best achieve that, what I described, the fair pricing return that we all seek for our potatoes. The basis for this, I mentioned this earlier, but since every red potato producing region can trace essentially its price to the Red River Valley, we ask the rhetorical question, are other red potato producing regions investors? Are they vested in what happens there with the Red River Valley crop? Same kind of rhetorical question. The section of the geography of the country that comes on a little bit earlier, even in the Red River Valley, every year is in Big Lake or central Minnesota, as we now describe it. And so, since the Red River Valley and since Wisconsin inherit that, call it a price baton from central Minnesota, that gets passed to them from the Big Lake area. Again, rhetorically, are they not also investors and vested with central Minnesota in that crop? And this year, I would suggest, even to a greater extent than maybe even before, the sales organizations, the growers from those regions, all of the red producing areas, got together and collaborated in a way, communicated information in a way that gave growers, gave the sales organizations the wherewithal to hold a market. One of the things that definitely happened is Big Lake was able to pre-sell, coming out of that conference, a large portion of that crop, and that really helped not leave the unsold portion to destroy pricing, and so that was one of the big factors that happened from that. But again, that crop transition conference, we hope and we're encouraged by seeing positive results come from that. Just to put a little bit more granularity to that, the transition time period, that kind of 2.5, 3 month window of that crop transition in the red segment, the 3-year average red transition supply through that time period is just over 3.7 million hundredweight. The 2017 red transition supply was even higher than that, a little over 3.9 million. That's almost right at a 6% increase in supply. However, the 3-year average 50-pound carton A price for red potatoes is $13.65. The 2017 average for that same component, that same price proxy of red potatoes, was $16.55. That's a $2.90 increase. I think that's probably one of the best transitions that we think that we've ever seen with a volume increase and being able to maintain, not only maintain, but hold a price on that market. So kudos to all the folks involved with that and to the red producing regions for what's going on there. All right, let's transition to russet potatoes, or as I could aptly title this little subsection of the talk, what a difference a year makes, right? In a very positive way. we're really encouraged by what we've seen in the russet market this year. I'm going to talk a little bit about that, how that happened, what we think about that, what it looks like going forward. 10-year supply history of russet potatoes you see here, and this one, you heard me talk about this last year, the trend line that you would lay in is certainly in a downward slope. Any given year, sometimes there's obviously yield differences, and Mother Nature always has the final say in any crop. But so, and acreage obviously makes a difference. So there's little bumps from year to year, but an overall trend line in that production line, you can see what direction that's going in. I'm going to focus on the tail end, obviously, of this area, the change between the 2016 crop and the 2017 crop. This is the first year, I think, in certainly recent history. I don't know how far back we even went to look at it, that the russet supply projection for the year has been below 69 million hundredweight. You can see there we're projecting 68.6. Out of that 92.8 million that I said was the total shipment projection into the total fresh market, all varieties, that comprises about just under 75% of that total, about 74. And again, probably the first time, perhaps ever, that the russet component of the market has comprised less than 75% of total fresh shipments. So what happened there? Idaho growers stepped up. Actually, all russet producing regions stepped up, and they looked at their situation, they looked at their supplies, they looked at the marketplace, and they, better than any job in recent memory, certainly the last 4 or 5 years, achieved a balance in that supply situation and the information and what they saw and had from the market. So that's what happened with this drop here. That's almost just almost 3.5 million hundredweight, and that's real close to a 5% reduction, which in the potato world, and I'm going to talk about this in a minute, small volume swings can sometimes mean a huge difference to the return side of that equation. So just in preface of that, I'm going to look at this slide. Most of you are used to seeing this. Again, if you see the podcast, you're used to seeing these kind of charts, and I think I showed some of these last year. This is the weekly shipping patterns for the year, this crop year 2017. So from essentially the 1st of August through next July, this is the shipment, either actuals or projections. So on the left side of the chart, you see, I guess it's those kind of greenish bars. Those are actual. That's what actually happened. Of course, we know that essentially to date. So think of that through the 1st of the year, 1st of January. And the rest of the bars to the right side, and then of course are projections of the volume shipped during that week that we make internal to our supply and demand committee and those kind of things within United, how we project the rest of the year will lay out in terms of volume shipments for those weeks. The background is the last year's crop, and the red dotted line is that balanced demand curve that I talked about that we have in russets and reds, but not in yellows. So the shipments during this current year, it's a very, very price positive and very encouraging, like I said, year and for the fair returns for the growers. What happened early in the year, the grower return index was significantly bumped up from the previous year. Again, the psychology and the anticipation of the crop that we had coming. There were some of those bumps that you see, those few weeks that bumped certainly above the balanced demand line, but again, starting from a much higher grower return index level back in late July, we took the market down some, but certainly not to the degree by any stretch of the imagination that we had the last 3 or 4 years prior to that. So that was, again, very encouraging, and we worked pretty hard to try to ensure that happened in a positive way, with looking specifically at those balanced demand requirements of supply for those particular weeks. And like I said, we certainly exceeded those in some weeks, and it did take it down. It always does, but certainly did not collapse to the degree that it usually does through that harvest window. And since then, they've been able to stabilize that and bring that GRI back up in most cases, the grower return index. And you can see how it looks for the remainder of the year with the shipping patterns. What you look for is that space between not only the last year, but the balanced demand curve. And so when you see that space, you can recognize that there's no reason at all why this opportunity in this year will not continue in a very fair return, price positive manner for the growers. So just to kind of summarize this, the average 5-year U.S. russet potato supply back from, I used 5 instead of 10 because of the direction of the slope on that curve. But so the last 5-year average is little over 73.9 million hundredweight. The average all region weighted average grower return index for that same time period, that 5 years. And again, that's any individual grower return index is going to be different than that. Idaho's is different than Wisconsin, but it's all weighted and put into one average for that 5-year period. That's $6.44. The 2017 estimate, as I mentioned on that first slide, is 68.6 million hundredweight. And so far this year, very happy to talk and report this, the average all-region weighted GRI for the 2017 crop to date, this is as of the first of the year, so January 1st, $8.93 per hundredweight. So it takes no genius to figure this out, or where I'm going with this equation. What is the russet potato supply price correlation? That was that reduction from the 5-year average is a 7% lower supply. That gave an increase from that 644 to that 893. That's a 39% greater return. So just think of a very simple example here. A grower can earn more harvesting 93 acres at an $8.93 return than he would planting 100 acres and getting $6.44. So again, kind of obvious in that equation, in that math, but very much worth emphasizing here. All right, in the second part of this, I'm going to shift gears a little bit. I want to talk about something that some of the presenters graciously have already kind of mentioned leading up to this, and that's the flow, if you will, of information, and in our specific case, the flow of information to a grower, to our grower members, and why that's important, how they can utilize that information in a way that benefits them in their strategic planning, in their long-term approach to the marketplace, and how they can do those things in a collaborative, knowledge-gaining way. I talk about this, I say, show me the money, so to borrow the line from the Jerry Maguire movie here 20-some years ago, but really in our case, it's show me how the money flows in the fresh potato world. And so just a quick example I'll walk through a very simplified supply chain in the fresh potato world. What flows, what's the big thing that flows, and that's material in the direction towards the end consumer. And so a grower produces and often consigns potatoes to a packer or a fresh shed, a marketing group. And that organization, of course, packs those potatoes, puts packing costs into it, puts packaging into it, and they then sell to the retailer. But those potatoes that they are selling are the consigned potatoes from the grower, as well as oftentimes, many times, their own potatoes as well. Many shippers are also growers, the grower shippers of the world. They then, like I said, sell to the retailer who buys those potatoes, and then in turn sells them to the end customer, the folks that take those 10-pound bags Ross out of the grocery store and take them home to prepare for their families. And one point to make in this sequence here on the material flow is that the grower really, especially when they're grower shippers, but really in all cases, retain ownership, and along with that ownership comes the risk of the ownership throughout that entire system. That's a little bit different than in the processing sector, where most typically the grower's ownership and thereby risk ends at Lamb Weston plant's doorstep. In the fresh world, you obviously have exposure all the way through that, all the way to the retailer. What's the other thing that flows then back in the other direction, the other major component, and that's the money. That's the money flow I was talking about. So the retailer buys at market or contracted FOB price. That contracted word in this box is very important, especially in this year. It's something for folks to definitely consider, because that's anytime you're in a more positive flow market, typically the contracts occurred before that and maybe below that. So that's definitely something to keep in mind. It's something to keep in mind in all markets, because the contracting component of the crop is probably, and we haven't really looked at this, but my guess is that that's certainly growing somewhat in how much of the committed volume is contracted versus not. So that money flows back to that marketing organization or the fresh shipper, the fresh shed. And by the way, that 85 cents a pound, that's an overall average number of what a retailer sells a pound of potatoes for. Then that money flows back to, like I said, the packer seller, which in turn flows back to the grower. The grower, the seller, or the fresh shed has to take, of course, their packing charge, everything that they put into it for their services, and then the grower receives his grower return. Well, you see a couple of question marks there. That grower price, like I talked about before, maintaining that ownership and that risk through this sequence, the grower's price remains unknown really until after the retail sale. So to get to the kind of the point here, what single influence might a grower exert in these market dynamics to minimize personal financial risk, and said another way, maximize their financial gain, obviously, to get that very fair return? And the answer really is this information that Jesse talked about, Sterling talked about it as well, in terms of growers' knowledge and being able to understand what's going on in their world and support their strategies and what they're doing. So that information flow becomes ever more critical. So you have information flow, of course, and it goes both directions. So those arrows going both ways. The retailer, of course, communicates with that packer seller on all these lists of things, the varieties, the SKUs, the quantity, of course, the sales price, of course. The grower communicates with his marketing entity and packing shed, of course, on some of those similar things. Just a small example of that list. One information link is really missing in this paradigm. And you'll see it there, the grower to all the way through the retailer. This shows it in a more clear case, that kind of schism, if you will, call it. There's no link really between the grower and that vital market data that he needs to make those key decisions in his strategies to be profitable for the long term. And since price is determined by supply, how can a grower determine the market supply needs without access to that data? And we would submit that growers should not do that they should get the information that they need. The information flow through our databases, the UPGA's database and communication systems. You see just a representation of all the growing regions in the country, all of our membership regions. You have the fresh potato market out there, and all these growing regions supplying that market. And so what they can do is communicate with that market. They can gain that knowledge, gain that information and that understanding through a number of these means that I talked about. I talked about the crop transition conference that we have. We certainly have the website services, the podcasts that I talked about, all that list of things where they can gain that knowledge. And then not only with the finished marketplace, but then with each other, that same communication happens. And you can see we can put any number of arrows on that slide where a grower can and should gather and be exposed to that information. All right, just in the last couple minutes I have, I'm going to change gears just again. We always do this, and so the last couple slides I'm going to talk about this, and that's a little bit of a projection for the 2018 crop. The alternative crop price changes, that's always a big factor in the model that we use. I talked about this last year, the model that Bruce has, and so this really sets the table for what those changes are and how that model is going to digest and spit out those changes into a form of a projection. The Idaho Grower Return Index, you can see that in just an incredible turnaround, almost 73% increase, and that's the October-December period. That's the last quarter of 2017 for the 2017 crop. Wheat, really about the only main one, a lot different than last year, up almost 24%. Now bear in mind, that's over a year ago and it was down very significantly, so it's come back certainly some, but still at levels that nobody would say it's completely off the charts in that way, but a 23% or 24% increase in wheat, significant. Barley and malt barley both again down even this year after a significant down last year, almost 8% in both cases. Hay is up a little bit. Alfalfa you see there, 13% increase, and corn again is down about 4%. So what we do is put that in the model, and this slide, you've seen this before, I talked about this, and by the way, these slides are courtesy of Bruce Huffaker at North American Potato Market News, and I should give Bruce a little shout out as well. It's his 25-year anniversary of the newsletter and providing the market critical information as he does as well, so Bruce, thank you for that. But this chart is there we go. All right, Russ. The Idaho Fresh GRI's response to that model. That harvested acres you see over on the left-hand side of the screen, that is, the yield over on the left-hand side of the screen, that's the trend line yield for 2018. And you can see where it is for the total U.S. at 438 sacks per acre. Across the top, you see the acreage. So as an example, if you liked what happened this year and you like that, a 0% change, and you say, I want to do the same thing again next year, a 0% change would yield or would give you just a shade over 1 million acres for the total U.S. And then at trend line yield, you can see what that would spit out in terms of the Idaho's Grower Return Index, right near $7. Again, a favorable, fair level, I would certainly say. So what did the model show? I don't put the vertical line on the slides themselves. We do talk about it verbally. So what did the model spit out? The model spit out a 4% acreage increase. So a couple things to definitely bear in mind, however, is that grower behavior can and does change based on things like this, talking about this, and a number of other factors. That whole information flow that the growers that I just talked about hopefully can gather and achieve and make those right strategic decisions. So that does change those few things and can have a very big impact, just like we saw last year from our projection on what actually happens. Two other factors I want you to keep in mind, and one was from Mike's presentation, did a great job, and what Dale often reports to us, and we talk a lot about in our meetings, and that is the significant increase in the supply of processing potatoes. The strength in that processing world, especially in the frozen potato world, is just really, really incredible, and so you have to bear that in mind with that acreage projection increase. So a lot of that, especially in the Pacific Northwest, certainly in the Columbia Basin and in Idaho, there's significant expansion both in the basin and in southern Idaho. You have to keep in mind that much of that acreage increase that we're going to see an acreage increase in those, certainly in those geographic areas, that has a home. It has a planned home based on these processing increases. And then the last thing to keep in mind with that is how this current transportation environment can impact what happens in those acreage decisions. It's a big deal. Every one of you here knows it, especially obviously the shipping community. But this transportation area is a really big deal, and not only in terms of the cost of trucks and all transportation actually, but even the availability of such is even a bigger deal. Some people tell me I couldn't get a truck at any price in some cases in some geographic regions. It's hitting all regions equally hard. I hear it from every geographic area. However, it does not impact the bottom line equally. And so a landed price in Atlanta, Georgia, or Baltimore, Maryland, it has a different impact on the grower return depending on how far you are actually from that market. And with this transportation environment, the percentage cost may be a similar value for each area, but the overall absolute numbers and that landed cost and how it impacts what a grower finally gets are not the same. So I would suggest as well that dynamic is going to go into planting acreage as well this year. So with that, I think time's up and we want to get transitioned over to our lunch. So I thank you very much for your attention here today. And I will wrap up actually, I think, right, George, with just our wrap-up sheet here. And I mentioned it already, but again, thank you very much to all of you for attending this and also those folks watching on the live stream. I think we had well over 300 folks again watching live stream, so just great to have that interest and a room full of people here. I also want to share a very heartfelt thank you for all the presenters here today. You shared some really invaluable information with the industry, and it's very important. You all played a really big role in making this summit a success, so thank you very much. Dale, thank you very much for moderating this. I'd be remiss if I didn't also thank Buzz and George, the rest of the United of America staff. They just do a great job. They work really hard on behalf of the grower members of our organization. This conference just seems to come off seamlessly every year, and that does not happen by accident. George just does an absolutely incredible job of getting everything buttoned up and taking care of everything, making sure everything runs and runs perfectly. So I want to thank you guys very much for that. They do a great job. Everybody always asks about the presentations themselves. The slides from this conference will be available, I think, as soon as tonight.